Hello everyone. Welcome to the Stock Minds web channel. Marvell Technology, NASDAQ, MRVL, has emerged as a standout in the semiconductor industry, delivering powerful revenue growth and meaningful profitability improvements in Q1 fiscal year 2026. Despite lingering market skepticism and a modest stock price dip versus broader averages, the company continues to build foundational strength, bolstered by surging AI demand and healthy cash flow. In this video, we will dive into Marvell recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Marvell Technology. Founded in 1995, Marvell started with CMOS read channel chips for disk drives. Today, it's a leading Santa Clara-based semiconductor designer specializing in data processing units, ASICs, storage and networking chips, optical interconnects, and custom AI silicon. Through strategic acquisitions, Cavium, Infi, Aquantia, and Novium, the company has built a robust portfolio addressing AI, data center acceleration, optical connectivity, enterprise networking, and infrastructure. Under CEO Matt Murphy, Marvell has transitioned from commodity chips to specialized, high-value solutions across growing markets. Marvell financial performance. Marvell Technology delivered a robust performance in Q1 2026, which ended in May 2025, highlighting significant growth and financial recovery. The company reported quarterly revenue of $1.89 billion, marking a 63.26% year-over-year increase from $1.16 billion in Q1 2025. Earnings per share (EPS) for the quarter turned positive at 20 cents, compared to a loss of 25 cents in the same quarter last year, representing an impressive 180% improvement. On a trailing 12-month TTM basis, revenue rose to $6.5 billion, a 21.6% increase from $5.34 billion the prior year. EPS TTM also showed notable improvement, with the loss narrowing to minus 57 cents from minus $1.12, a 49.11% reduction in losses. Free cash flow per share, TTM, climbed to $1.59, up 18.66% from $1.34 a year earlier, underlining Marvell's strong cash generation capabilities. Profitability metrics further reinforce Marvell's financial health, with a gross profit margin of 48.67%, a net profit margin of minus 7.56%, and a free cash flow margin of 21.19%. While net margins remain negative, they reflect improvement, and free cash flow margins highlight operational efficiency. The company posted a return on assets of minus 2.45%, while return on equity remains in negative territory at minus 3.54%, partly due to past net losses. A debt-to-equity ratio of 0.34 suggests a healthy balance sheet with manageable leverage. Over the past 5 years, Marvell Technology's revenue has been growing at a 20.3% CAGR, and its free cash flow at 16.9%. While it is still not profitable on a GAAP basis, it is projected to become profitable this year. Marvell Fiscal 2026 Financial Forecast. Looking ahead, analysts forecast continued strong growth, projecting fiscal 2026 revenue of $8.24 billion, a 42.95% increase over fiscal 2025's $5.77 billion. Non-GAAP EPS for 2026 is expected to rise to $2.80, representing a 78.1% jump from $1.57 in 2025. Analysts remain bullish on the stock, assigning a strong buy rating with an average price target of $89.13, implying 28% upside from current levels. The highest price target of $133 suggests potential upside as high as 91.08%, underscoring strong analyst confidence in Marvell's growth trajectory. MRVL stock price performance and valuation. At the time this video was created, Marvell stock was trading at the price of $69.64 per share. Marvell Technology's stock has declined by 5.07% over the past year, underperforming the broader S&P 500 which gained 11.5% in the same period. However, on a longer time horizon, Marvell has outpaced the market. Over the past 5 years, the stock has delivered a 106.4% gain, surpassing the 98.4% return of the S&P 500. The stock offers a modest but stable dividend yield of 0.34%, giving additional return to the shareholder. From a valuation standpoint, Marvell presents a compelling case for the investors. The stock currently trades at a price-to-sales PS/TTM ratio of 9.08, with a forward PS ratio of 7.14. The non-GAAP price-to-earnings PE ratio stands at 35, while the forward PE is 24.4. The price-to-free cash flow PFCF ratio is 43.58, which, while elevated, it is still in line with the historical average. Based on FinChat data, if we look at the valuation over the past 5 years, Marvell's forward PS ratio is above the average. The forward PE is below the average, while free cash flow is in line with the average. The forward PE indicates that Marvell stock could be undervalued, as revenue and net income are projected to grow rapidly. Marvell growth potential. Marvell growth prospect remains robust, driven by several factors. 1. Data center segment dominance. The data center segment has emerged as Marvell's primary growth engine, accounting for over 70% of total revenues and demonstrating exceptional expansion potential. In Q1 2026, data center revenue reached $1.44 billion, representing a 76% year-over-year increase. This segment's performance was driven by robust demand for AI infrastructure, custom silicon solutions, and electro-optics products that enable high-speed connectivity in data centers. Management expects continued sequential growth in the data center segment during Q2, with projections for mid-single-digit percentage growth supported by volume ramps in custom AI silicon and strong electro-optic shipments. The company's strategic focus on this segment positions it well to capitalize on the expanding AI infrastructure build-out across hyperscale cloud providers. 2. Custom AI silicon market opportunity. Marvell's custom AI silicon business represents perhaps the most significant growth opportunity for the company. The global custom silicon market is projected to experience explosive growth, expanding from $7 billion in 2023 to over $40 billion by 2028, representing a 45% compound annual growth rate. Marvell aims to capture a substantial 20% share of this expanding market, targeting a $40+ billion custom silicon total addressable market (TAM) by fiscal year 2029. The company's custom AI silicon programs have already entered volume production and are contributing meaningfully to revenue growth. These specialized chips, including custom AI XPUs and electro-optic solutions, are designed to meet the specific performance requirements of hyperscale customers for AI workloads. The strong adoption among hyperscalers is driving significant revenue momentum, with custom silicon becoming the largest component of Marvell's data center revenues. 3. Strategic partnerships and market position. Marvell has established critical partnerships with major technology companies that provide both revenue stability and growth opportunities. The company maintains strong relationships with hyperscalers including Amazon Web Services, Google, and Microsoft, which collectively account for over 60% of data center revenue. A notable achievement is the 5-year multi-generational agreement with Amazon Web Services, which analysts view as a critical inflection point for Marvell's custom silicon business. The company's collaboration with NVIDIA further strengthens its position in the AI ecosystem, with partnerships focused on delivering the immense bandwidth requirements for accelerated computing. These strategic relationships not only provide stable revenue streams, but also offer opportunities for collaboration on next-generation technologies. Risks to consider. While Marvell stock presents a compelling investment case, we should be aware of potential risk. 1. Geopolitical and operational risks. Marvell operates globally, with significant presence in countries like China, Taiwan, and Singapore. Geopolitical tensions, trade restrictions, or disruptions in these regions could affect its supply chain or market access. Additionally, as a fabless chipmaker relying on third-party foundries like Taiwan Semiconductor Manufacturing, Marvell is exposed to risks from foundry capacity constraints or production issues. 2. Cyclicality and market sensitivity. Marvell operates in highly cyclical semiconductor markets, including cloud capital expenditures, 5G infrastructure buildouts, and storage drive demand. These markets are prone to downturns that can significantly impact Marvell's revenue and profitability. The company's end markets can be volatile and sensitive to economic cycles, which poses a risk to consistent growth. 3. Competitive pressures and margin challenges. The semiconductor industry is highly competitive, particularly in AI and custom silicon markets. Marvell faces margin pressures due to its focus on lower-margin, high-growth markets like AI and data centers. Additionally, the rise of smaller, more efficient AI models, for example DeepSeek, could reduce demand for Marvell's high-performance chips, impacting its growth trajectory. Conclusion: Marvell Technology's Q1 2026 results underscore the company's impressive turnaround and accelerating growth momentum. With revenue surging over 63% year-over-year, a return to positive EPS, and strong free cash flow generation, Marvell is clearly capitalizing on its strategic focus in AI, cloud data centers, and high-speed connectivity. While investors should be aware of macroeconomic risks and industry competition, Marvell's positioning, innovation, and improving fundamentals make it a compelling investment opportunity. But remember, this is not a financial advice. What do you think about Marvell? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.